Ladies and gentlemen of the crypto space, we're live on a Monday at 11:30 a.m., January 25th, the end of the month. As always, there's serious stuff going on, and we are here to figure out what is going on and the relationship to that and what may play out. And that is what we do on a daily basis. We are speculators. Now, obviously, folks know that I'm a relatively risk off speculator. I'm risk adverse. There's times where I no doubt have taken risk. There's times where there's less risk to be taken. There's times where there's reason that more risk can be taken. Um, and while I do say often I value the risk off position much more, the recurring revenue streams, I cannot argue with the temptation and the emotional drive to want to take risk to potentially attempt to capitalize on asymmetric price appreciation potential. And clearly, we're in the crypto space, and that is where that potential is probably the most pronounced. These people in the equity space think their 3, 4, 500% rips are big. Ha! 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 Yeah, okay. They don't know what they're talking about. Ave, a couple of cents when it was lend, and you get a 3, 4, 5, 6, 7,000% on your money. Ay, ay, ay. So, anyway, market outlook for not dollar markets. General title, nothing specific, just what's on my mind this morning. Well, I want to talk about what a crash is and what's coming for the equities markets. And I want to take a look at the dollar, obviously Bitcoin. We'll talk about my speculative play. What's the largest risk on position I've taken? I can't even remember how long. This might be the largest risk on position I actually have ever taken. It's what I have done, and that's not necessarily what other people should duplicate. Always do your due diligence and never risk what you're not willing to afford to lose. Even though I might say this is my largest speculative play I've ever made, it's something that I'm more than capable of absorbing if it's a loss, and it would not uh, negatively impact my portfolio to any meaningful extent. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges. Not your keys, not your crypto, non-custodial, DeFi, or nothing at all. Bam. Let's pop it over to the main screen and see who's in the stream. Sam's in the house. Yes. Crypto Monk, always a pleasure. Angelo, Matt, everyone's cool. Angelo, RR, my man. Lidge, happy Monday. Bitter's in the house. I keep forgetting that's you, Bitter. Always a pleasure. Crypto Monk, what's your take on why Rook bought a boatload of Kyber? Yeah, well, might as well start with that topic. Let me just see who's else. Cal's in the house. Always a pleasure. All the best from Norway. Man, I live in Florida. It's beautiful. It's when it's freezing outside, we're talking 40s and 50s. New York, 5 degrees, 10 degrees. Yeah, I got out of New York. So, but I say that because you've posted some landscape shots, and a bit jealous. Enjoy. God bless you, my friend. Digibyte, always a pleasure. Matt hit the likes as he says. Captain Weber in the house. Sylvester, howdy. Always a pleasure. Always a pleasure, everyone. So, Crypto Monk bringing up Rook. So, Rook has yet to launch. Keeper DAO has yet to launch. They're in a liquidity distribution phase. They've been massive, massive. Some of the biggest participants in the DeFi space have taken positions, liquidity positions in Keeper DAO to capitalize on the Rook emissions. By far, 0x1b is the handle, but that's also the address of one of the largest participants in the DeFi space. And they were liquidity mining the entirety of the time. They were selling, according to their statements, half of the Rook. And I'm inclined to think they're holding the other half because of the potential for the platform. Keeper DAO is a unique participant or a unique project in the DeFi space. There is absolutely unilaterally, undebatable, any other project that does anything remotely comparable. It's just novel, novel. And Kyber offers the capacity for channels, routes, liquidity, not cross-chain interoperability, but interoperability in the sense that you can have access to literally any specific asset. You have the whole network, so you have the entire Ethereum DeFi space, every single token, every single project, vis-a-vis Kyber's swap infrastructure. So if you have whatever the liquidity is available in the treasury of KeeperDAO, that liquidity can easily interact with any asset in the crypto space vis-a-vis the Kyber infrastructure. And to top it all off, they'll probably be working together on the strategy to enhance the functionality and the infrastructure available to the keepers. My speculation, for transparency, KeeperDAO is the largest bet I've ever made, and my speculation is that once the liquidity mining stops, there'll be a supply shock, which is a deflationary pressure, and that's obviously a price appreciative force. But that combined with the release of the DAO, the release of plans and expectations, the release of further infrastructure for keepers, and what I see as likely to be the case, the scaling of the platform. So combine the enhanced functionality, the enhanced tools available to keepers with potential explosion of liquidity. Um, they've made, check it out. They've made like 14, $15 million so far. And, since late November, very late November. So it's a little less than about 2 months, give or take. At $17.8 million in the treasury. And if you look at it on a monthly basis, this is a money printing machine. It just grows. So I have reasons why I've done what I've done. So you all must do your own due diligence and make your choices accordingly. Bear in mind, very notable that it's currently at a quite inflated price. We'll take a look at the price point. We're sitting at $386. This was 70 cents, $70. The vast majority of my position was at $65. So that is something to consider with regard to your position sizing. All right. So, take on risk accordingly, position size accordingly, and every rule of thumb that I have always told everyone, 100% transparency, you can't neglect. And in the end, in some regard, that's why I like the risk off positions, and I feel much more comfortable talking to everyone, to all of you, about my risk off positions because that's risk minimized, and I don't like talking about risk on because then other folks think about risk on, and I don't like being in that position. Because risk on, there is potential, or at least greater potential, for much more significant losses. That's why I never talk about like um, uh, uh, protocol tokens, DAO tokens, or stuff that's inflationary or minted out of thin air. Like never really hype Badger, never really hype Dig. I mean, Dig's doing extremely well. Let's take a look at Dig real quick. I mean, here, let's look at that on CoinGecko. I think it's probably up to like $80,000, $90,000 right now. So bear in mind, it launched at 30,000 with Bitcoin. But that there's maximum risk associated with these. I'd never applied value to it. This was airdropped. If you ever interacted with the Dig platform, you got a little bit of Dig. Dig's sitting at $76,000. But that's maximum risk. It's a very innovative protocol, rebasing, pegged to Bitcoin, and it just goes up. But what goes up can come down, especially in an untested, unknown market. And Bitcoin is not that. Bitcoin is not an untested, unknown market. We know some serious long-term macro facts that over 11-year span, it's been an annualized price appreciation rate of 200% per year. That means something from a risk-off perspective. That means if you just hold Bitcoin and you go based on 11 years worth of data, the odds are next year you will have twice as much value. Well, 200% more value. And then next year, another 200. And that's what an annualized price appreciation rate of 200% for 11 years means. That's massive. And that's risk minimized. That's something I'm much more comfortable talking about. Anyway, um John, ladies and gentlemen, live in the crypto space. Yes, welcome. Thank you everyone for joining. It's always a pleasure. Derek, what's up, Noah? Eagle to the heavens. Yeah, Elron is a wonderful platform. Elron. So I don't have any Elron. I don't have a lot of assets that I really wish I had. I did very well with 1 inch. I wish I had 100 grand with a 1 inch. I wish I had another 100 grand with a curve. I just don't. I just don't have that kind of capital that I'm willing to put into a risk on position relative to the Bitcoin, which is going to appreciate asymmetrically unto itself. But Elrond is awesome. Elrond is the only Ethereum alternative. Well, one of the few Ethereum alternatives that actually has smart contracts live, and their social media commentary and communication is very, very effective. If you compare that to like Cardano, which social media is decent, Hodgkinson is decent, so Charles doesn't do so bad, but people bought into it and inflated the price to over 10 billion plus or whatever the hell it's at, and there's literally nothing. There's no smart contracts. And when I say there's zero developer activity, it has nothing to do with what IOHK is doing and what Hodgkinson's is doing. I mean, there's no community. You can't develop on the platform. There's no smart contracts yet. So, and I know the argument folks will say that when smart contracts are released, it's going to be an explosion. Yeah, I know. So that's great, but that's not now. So, we allocate value based on what's going on now. And what's now, if I could load it, is the 24-hour sort, is an explosion. And look, and there's a reason why Elron's doing what it's doing. It's one of the few that has smart contracts, and they're doing incredible things, and they deserve this kind of a rip. And they deserve to get into the unicorn club. Definitely more so than many other assets that are currently sitting there in the top 10, and there's 44 plus assets, give or take, that are in the billion-dollar valuation club, and they've done things that other projects have not, and that's meaningful. And as I said, I don't have a position. Tezos, is there any developers? I mean, uh, uh, Polkadot, Polkadot develop. Um, let's see if this comes up. I'll just look through Little Moon Lambo's history. He posted a nice picture, images. Damn it. Let's see if I can find it real quick. This is Polkadot. Bear with me, guys. This will take a minute, but it's worthwhile to show this image as it'll express my idea visually, if I could find it. I mean, Polkadot's at $18, guys. It launched at like $2 or something. That's just crazy. Come on, I know you post a lot, bro, but where's the Polkadot image? Oh, here it is. So come on, guys. I mean, you got Cardano, not this, this. You got Cardano that has no smart contracts, has no developers. There's no TVL. You got Tezos, which is like, it's kind of, was it on siesta? There's no activity. There's nothing. And you have Polkadot, which is literally an explosion. This is basically like, as he says, says, Ethereum 2017. This is an absolute explosion of developer activity. There is no other Ethereum alternative platform that has this kind of explosion of activity. Well, yeah, there is. I'm sorry, Cosmos. So Cosmos and Polkadot. Polkadot has, just like it's a bit of an open feel, kind of an Ethereum feel to it. And Cosmos does as well. So don't get me wrong, but I think Cosmos is just going to be explosive in the East with the Asia narrative and the IrisNet's integration with the BSN, which basically exposes all of the BSN to the Cosmos ecosystem vis-a-vis, was it the Stargate, which is their interoperability protocol. So that's it. So yeah, Derek, your e-gold bags are decent. You think? Ripped 40% today, my friend. Absolutely incredible. Akala and Karura are going to be awesome. Yeah, listen, Akala is basically is going to be functioning with Ren and the dark nodes. So I don't know all of the activity going on. There's just only so much we could digest. But what I know is Ethereum is an ongoing disruption. Nothing will disrupt Ethereum. That's based on historical precedents outside the scope of the crypto space. And I've said the analogy before. It took 20 years for Apple to catch up to Microsoft, and Apple still doesn't own enterprise. Microsoft owns enterprise. So you can't disrupt an ongoing disruption. That's just the way nature works, human nature. It's just the way it works. So the power of this isn't to disrupt Ethereum. The power of this is to enhance Ethereum, provide functionality, and extend the capacity of what Ethereum is doing. It's just too far ahead. Ethereum's too far ahead, and that's the way it works. By the time anything catches up, Ethereum will be that much further ahead. And that's the same story with Tesla, for the matter. So this is all going to be synergistic with Ethereum, and the same thing with Cosmos. And I can imagine a future where there's an incredible interoperability layer, probably facilitated by protocols like Quant and Ren and others. There's a big difference between Quant and Ren with regard to their target markets and functionality. So that's an entire topic unto itself. But the point is interoperability. You got these are all going to be, not all of them, but there's a good deal of substrate blockchains. They're going to be parachains in Ethereum. So you got a network of blockchains that are all interoperable with one another, um, that are just going to be powerful unto themselves and fully augment and enhance the already existing, the empirically proven functionality of the Ethereum DeFi space. Absolutely incredible. Digibyte, are there any DeFi tokens that are worth just accumulate? No. Well, yes. Well, no. Listen, that's the wrong mindset. Bitcoin is big. Bitcoin is different. Bitcoin was the first. Bitcoin fits into the global financial macro narrative. Ethereum is starting to a little bit, but it's definitely not on the degree at which Bitcoin is. Um, so you're talking about DeFi tokens probably because they're cheap. I mean, Polkadot's like $18, so it's not really that cheap. That's not the way you can't invest like that. If you want to invest in just accumulate Bitcoin and nothing else. If you want to apply risk and accumulate other assets and not experience a 70% loss of value when the system corrects, you have to know what assets to apply value to, which requires significant due diligence. So you can't just buy. I know for years and years, people, especially in 2017, everyone just bought shit. And it was like these ICOs and these UTXO blockchains that did absolutely nothing. So don't get me wrong. I know where people are coming from, and a big Digibyte fan, but there's such a big part of the community that just buys and and I'll show you why buying is bad. DGBBTC. So this has nothing to do with the awesomeness in the project. Love the project. I love the technology. But if you just bought and held Digibyte, you lost all your money. I mean, come on, guys. This thing's sitting at 76 sats. It's literally pre March. It's almost at 1 year. So it's just bad, guys. So you just can't just buy stuff and hold it. It doesn't work like that. Find Bitcoin. Buy Bitcoin and hold it. So that's the name. That's the deal. So Cosmos is big deal. Digilight. I myself foresee it to grow, and it's an inflationary protocol, so you have to stake it because otherwise your holdings are diluted, and it's kind of misleading because usually in an inflationary protocol, uh, the value of your holdings would be diluted, but there isn't complete market saturation for the protocol. So there's going to be an enormous continued growth and expansion of the project. So even in the face of dilution, you could expect price appreciation over the coming years. Um, so fine, I can't argue with some of those types of long-term positions. Given the narrative for Polkadot and Cosmos, those are probably decent assets to accumulate over time. You have to stake them, you have to delegate them because of the dilution. But there's in 3 years, Polkadot is gonna be where Ethereum is today. And Cosmos, who knows? Because of the China narrative, it could easily stay on par with Polkadot and do some incredible things. So those are great assets to possibly accumulate. But bear in mind, they're up huge. You're buying Polkadot at $17.68. It launched at a fraction of that. When the equities market's correct, you can see a massive depreciation in value. You apply 10 grand to Polkadot now, and it's $4 at the end of the year, and you lost almost all your money. So that's why it's very hard to apply value when we're looking at significantly inflated asset valuations that we're looking at right now. I mean, it was the equities markets are on the verge of correction. And if let's look at the DXY, and this is pretty much March 2020 all over again, because all they need is a shock. All they need is an event, and it doesn't even need to be black swan. It just has to trigger a risk-off event. And because the equities markets, particularly the tech equities, are so distorted, even a minor event is going to trigger a cascade of longs, of long positions that is so extended. It's going to be a straight line down. It's the opposite of a short squeeze. It's a long squeeze. It's going to be a vertical line down. There will be no way to get out, and immense value is going to be lost. Now, bear in mind, there will be people that get out, and it's going to be the people that are algorithm traders that are executing transactions in fractions of a second. And this comes into probably where we could take the final minutes of the stream and digress away from crypto for a sec. Think big picture. And what is a crash? People think, the markets are crashing. The Nasdaq and the New York Stock Exchange is down 60%. It's blood everywhere. Great Depression. Yeah, but that value got sold. The assets in tech, like whatever, Tesla's massively inflated. Great project. But when it goes down in value, like 30, 40, 50%, that value was because equities were liquidated, and that value has to be allocated somewhere, because if you keep it in a bank, you're just losing money. And if you can imagine, like a big corporation or a big a pension fund or whatever, like 50 bill. 50 bill, and you considering inflation, you're losing 10% a year. Oh, so nobody wants to do that, and they're going to frantically try and apply that value to another asset class. And that's what I like to think about. That's what I thought about for the last many years in order to prepare for what's coming. And what's coming is a reckoning for the equity space. People buying, they have no idea what they're doing. The market's completely distorted. There was no oversight whatsoever. There was no education, no financial literacy, and people bought for the wrong reasons. They're buying because it's going up, and they're going to get hurt, and it's going to be bad. But I guess on the positive, we could say that an enormous, a tsunami of value is going to be reallocated to a couple of sectors: energy, commodities, mining, and metals. Basically, not equities. Not tech equities. A tsunami of money. And we're seeing that already, and that's kind of what I'm thinking is the case. So I'm seeing domestic U.S. mining, or frankly, just battery metal mining, pick up. And we haven't seen this in years. I've been in battery metal mining for many years. 2016, 2017 was an explosion of activity, massive appreciation. Then 2018, it collapsed. 2019, abysmal. 2020, abysmal. And maybe late December and then January, all of a sudden, an explosion of value. I showed you guys this morning in that tweet. Just an explosion of value. And I think uh, Gut says that's the smart money, starting to take money off the table from the overextended tech equities basically the inflated markets and reallocating value towards the markets that have yet to inflate. Now, the crypto space is interesting because it has inflated significantly over the last couple of months, and definitely a good part in summer DeFi summer 2020. But when you talk about the market cap of all crypto, basically a little less than $1 trillion right now, it's microscopic. So, um, this is what everyone's so excited about. It's not tech equities, it's inflated, but the relative degree of inflation is microscopic compared to the scale of the global financial system, which is denominated in quadrillions of dollars. So commodities, copper may do extremely well, especially given its necessity in wiring. And if we're going to have somewhat of a green revolution, and that's kind of what like Tesla started, triggering every auto manufacturer in the world to respond, you're going to need a massive, massive, massive amount of copper. And clearly, the battery metals, which is, I mean, I can't say folks are too late, but there's probably still some opportunity. It's not going to be the smart money. Um, smart money's been in for years and has sat through blood in order to get 6, 7, 800% gains. Um, but the metals are lithium, cobalt, nickel, and graphite, and it's all over the world. Australia is big on cobalt and lithium. Parts in Africa are big on graphite and cobalt. North America has huge, so one of the largest reserves in lithium is in Nevada, but there's already miners there, and you have to figure out the miners, and then figure out which ones are undervalued. Because when there's a crash, when a collapse happens, money goes from overvalued to undervalued assets because it's not going to fricking go to dollars. Fuck dollars. Dollars are stupid, especially in other countries where you have such high negative yielding interest rates. Now, I know folks are talking about the dollar. Now, the dollar is a complete wrecking ball. Now, bear in mind, we've seen non correlated activity. This past Saturday, was it? I believe we saw some significant altcoin action in the face of bullish dollar behavior. But that footnote aside, whether we have correlated or non correlated activity relative to the dollar with regard to the crypto space, this looks like it's forming pretty obvious head and shoulders. Uh, Stoke is completely oversold, overbought, and this is pretty obvious with the 200 EMA and the 4 hour. Is that not apparent to be resistance? I mean, it smacked into it, it wicked, it retested with the next candle, which these are 4 hour candles, and it got rejected. And RSI is oversold, and it's a head and shoulders. So this definitely looks bearish to me. Now, whether that's in the short term or the long term, I know the long term bulls, the dollar bulls, and I agree with them. I agree that the dollar demand is just going to go up, up, and up. And QE, I love how Stephen Van Meter talks about QE and printing and all that stuff being deflationary. I agree. But that's not necessarily in the short term, and that's probably what the central banks are trying to do. They're papering over the cracks, as almost all of them often say, and you know maybe the IMF and the big the powers that be with regard to global financials intend to just blow blow the biggest bubble ever, and then replace the system in some way. So maybe there's a master plan, but you know we can't speculate too much in that regard because we've never had such an event historically. We can only attempt to understand what may play out, and probably the best mind to do that is Lynn Alden. Yeah, she's going to be the person to understand how the events of today best compare to the events of past. But what I look at, and the only thing my brain is capable of understanding, is up or down. I'm a simple kind of guy. I know when markets are going up or down. That's all I know. And I do have these macroeconomic observations, but to not such a degree as the smarter people in the room, and I mention their names often. So bear in mind, this is interesting as well. What is this? The 50 SMA? I think that's the 50 SMA. So The dollar got rejected on the 200 EMA on the 4 hour, and it got rejected on the 50 SMA on the daily. And this is head and shoulders. Dare we print? And tomorrow, dare we start to print a red candle without breaching a higher high above this? That's going to look like one heck of a head and shoulders. So that's just an observation. What do I know? That's just what I see. Does it mean anything? I hope so, because this information helps me manage my damn portfolio. I really hope it does. Anyway, let's wrap it up in a couple minutes. But what am I missing? Thank you. I hope I'm helpful. Don't take risk if you don't have to, and I can't argue with folks taking risk, especially with the risk I'm taking with one large position at this point. The rest of my portfolio is extraordinarily risk off, and most of it was yield and gains and interest and stuff that was given, and I just spread it around over time, spread it around nice proportionally. But I don't often do a concentrated bet unless something seems incredibly obvious to me. And I talked about it at the beginning of the stream. I don't want to. All right, fine, let's keep it down. I have a feeling, and if I'm right, you win big, and if I'm wrong, it's gonna hurt. And it's not going to destroy me because I made sure of that, proper position sizing. It's not 50% of my portfolio. For transparency, it's 15% of my portfolio. And for me, that is a massive, massive position. So that's massive. I've never done a position size like that. Most of my risk on positions are a percent, 2%. Small percentages. I've never done something like this. We'll see what happens. Excuse me. Can I teach you guys about commodity and mining investing? That is an entire stream unto itself. The amount of battery metal miners out there is immense. I've been doing that since like 2016, and I wouldn't even know where to begin with that kind of education. I mean, that is a degree of financial analysis, understanding what the company's doing, who the companies have offtake agreements with, where they're mining, what type of mining. Are they going for brine, lithium carbonate, lithium hydroxide, what the demand is in the market? Follow Simon Moore's, because this is something like 170 plus gigafactories, like massive, massive battery factories going on around the world that are being built. And if they're building gigafactories, they're going to need lithium, cobalt, nickel, and graphite. And right now, there's not enough of it. So by 2030, there's not enough raw materials to provide to these factories, and that means so this is a very long-term play. I mean, I've been in a lot of these positions since 2016, and they're probably not going to play out until the last couple of years of the 2020s, 2026, 27, 28, and then 2030. It's just going to be like blow off top crazy, because that's when everyone realizes is very late that the world has changed, and they let it happen right before their eyes, and they did nothing about it. But the foreshadow is here. You don't start building. You don't start building 170 gigafactories around the world. Gigafactories like bigger than the size of Tesla's gigafactory in Nevada. About to get a double boost in 2021, dawn of a new commodity supercycle. He's been in this a long time, and for him to start saying things like this is extraordinarily meaningful. So you follow him, and he'll have some great posts and look through his history. This has been going on for a long time. This is a long time in the making. And you guys, I posted that the gains for Piedmont. That thing was up over 800% for me this morning. But it's just like with the crypto talk. You're gonna buy something that's up over 800%. It could easily drop 50%, and it's going to be quite painful for folks. But for myself, I don't really care, because then I'm still up 400%. So that's the long-term play with the smart money. When you're in really early, you could experience significant drawdowns and still be in gross profit, like disgusting profit. I mean, 400% is gross profit. And that's a 50% loss of value compared to the current valuation. So it's the name of the game. Anyway, I wish I could help more. I try and help as best I can. And I do this every day. So join me. Tell everyone to subscribe. Thank you, everyone. 17 people on the stream, only 11 likes. Everyone click that button. Thank you very much. Monday, 12:05 p.m., January 25th. We'll do this again tomorrow. Tell everyone to subscribe. And as always, thank you for joining. Have a wonderful day. Peace.